good afternoon, everybody. Live on YouTube, live on the virtual trading floor. It is Monday, October 17th. And I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA/SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Bam, there's a position disclosure. Andrew had one of his best days today. I love it. Absolutely, absolutely love it. Great job. Keep it up. Keep it up. Charts. All right. So how do we close today? As of right now, I'm looking at SPYs printing up 2.7%. Woo! Q's up 3.5%. IWM 3.3%. This is like the biggest rest day I ever remember. Markets are up 3%, and we're talking about how this was the more boring rest day compared to what we've seen. And it's an inside day. I don't know, have I ever seen a 3% inside day before? Have I? Ever? I wouldn't be surprised if that's the first time I've ever seen an inside day where we're up 3%. SPY did not break yesterday's low or high. Wow. These last 3 days, the percentage moves these last 3 days have been insane as we kind of go into this earnings season. We got Netflix, I think, tomorrow, Tesla Wednesday, Snap Thursday, I think is what we're looking at for this week. That's just the warm-up. The big show is going to be kicking in next week or the following couple weeks after that. We have the rest of the mega cap names report. But yeah, inside day today, going to the small time frame here for the SPYs. You can see we had a really big gap up. We got, 7.5 minutes or whatever of upside follow through, created this little shooting star candle that usually signifies a pullback. We talked today about how this is a continuation hammer and that this could be a long off the fourth bar of the day, but I don't like taking that candle. I don't take that trade with this degree of extension still from the ADMA. Technical pullback comes in a little bit deeper, closer to the ADMA, then you get your inside 5 and up that makes us a little bit of a better long trade. No follow through. This 368 area really held as resistance intraday. Going over to a 15-minute chart so we can look back a little bit further. This area from like Thursday's high, right? This is the CPI day. Big gap down, ripping all the way back up. This area here from like Thursday's high, there's really not a lot of price action above that. On Friday we had like a brief stint above it, and then back here on the morning of, I guess that's Friday a week ago, we were very briefly above but sold off right away. So for the most part, this 368 is a little bit of resistance here. And if we're able to clear that, we kind of have a pretty straight gap up to 372.50. So that was the biggest thing that I was paying attention to intraday. Right, we got this great move higher here initially. Everything is looking really impressive for the most part for small time frame bulls. And then that just kind of faded into nothingness. This pullback here was a little bit deeper than I would have liked. I did not like how we were kind of consolidating between the 8 and 21 EMA on the 5-minute chart here, post 11 a.m. That's a full 15-minute correction as well. Could have been a little nerve-wracking if we broke lower, which we actually started to, and that led to a break of opening lows because then we'd be pulling into this bigger gap. But that didn't materialize either. We worked our way back to the top of the range, and then we just sat in this range all day. And honestly, in this type of price action, and this is one of the things that we were emphasizing, you don't want to be doing a lot of aggressive trading in this type of price action for the market. There were certain individual names that were moving much better that you could have focused on. But for the market or things that were looking like the market, this type of sideways price action, it's very hard to be kind of nailing good P&L on this. So for me, for the most part, midday today and into the afternoon session, it was position management on things that I already have on and kind of continuing to see, well, can we apply some upside pressure on this 368 for the SPYs to actually break up? And we didn't. Taking a quick look at the other indices here, the Qs you can see also, inside day, very similar story for the Qs. Big gap up, spent the whole day resting. I love this actually. By the way, this tail here on the spies, I don't know why I keep getting these fake tails on my SPY daily candles. It happened this day, and this day. But this was a tighter day than this. It's really just the body of the candle is the real candle. So the Qs here also just a tighter body. We discussed in the morning meeting the importance of getting back above 270 for the Qs. We ticked above 270 a little bit today. High is around 270 quarter. But we basically just sat around it all day. And the IWM, similar situation. I think IWM, I said I really want to see us get above like 170, 250. That's the area that I'm paying attention to based on kind of Thursday and Friday for this market to start looking a lot better. Because Friday was no good. I mean, we know that Fridays have been weak all year, but that Friday price action, I was concerned that we pulled back too much percentage-wise of Thursday's up move. And if you look at certain individual stocks, like AMD as an example, easily you could say we pulled back Thursday too much of Friday's move. So certainly a little bit concerned. I was saying Friday into the close is like the bulls really are going to need to come in and prove themselves if nothing kind of goes wrong over the weekend. And yeah, that's where we're at. So we have an inside day today that closed strong for all three indices that we can look at as a setup day for tomorrow. So tomorrow morning we'll assess how we're gapping versus the inside day high and low. But basically, and if we can get an inside and up, so in other words, the market is breaking through today's high tomorrow, that could be a real signal for upside continuation. And then you also really got to, you also have to really continue to remember where we are as far as market dynamics, because that's another piece of information that if this market really starts to break up, if the inside day breaks to the upside, if the descending channel begins to break, which we're a little bit of a ways away from still, then that whole market dynamic situation where no one's long, everyone's in cash, everyone's short, everyone is hedged, could start to come into play again. It's similar to what we saw when this market finally began to go in July and August. It was just a virtuous cycle of buying, and we were able to see the statistics that most of this July and August move was really not new longs coming into the market. This is mostly hedges being unwound, shorts being covered, and you see just how massive that move was in this environment where we've seen a lot of negative gamma and low liquidity and high volatility. If we were to begin to break up, we could be looking at another situation that's like that. So that's why, as far as longs go, I know some people still have longs from Thursday morning. I still have longs from Thursday morning. You always want to trim and trail, basically. Get your risk covered, but at a certain point, don't be afraid to be greedy on the upside, because these bear market rallies, we've seen a couple of them this year that were just massive upside, extremely, extremely vicious. And each time we've had that, it still has led to new lows. So it's like you could be bearish on this market, big picture, but you better watch out if you get a repeat of July, August, which I'm not saying is what will happen. I'm saying that's certainly a possibility based on how this setup is starting to come in and the way they bought us back up off that CPI. If we start, really clearing through, 270 for the Qs, 368 for the SPYs, that could certainly come into play as well. So that's our big picture. Again, inside day, rest day, even though it's a 3% up rest day, which is just totally insane, but par for the course as far as the insanity goes for the year. And we'll kind of reassess that with the gap tomorrow. As far as individual trading goes today, execution goes. So we discussed in the morning meeting today that this gap makes things a little bit tricky. I do not want to be rushing into longs into this big of a gap that's technically a common gap. These types of gaps, this move here following this gap that never broke this opening low, that's a little bit lower probability. When you have a common gap to the upside, common gaps are also referred to sometimes as area gaps, there tends to be some profit taking. And the reason why, and this is actually a good little gap lesson, the reason why common gaps tend to get filled is basically because of profit takers. People who are already long, and then you get this little common gap that comes in. People who are already long are inclined to sell. People who are not long are inclined to chase. Why did this common gap not get filled? And this is why, by the way, you never as a trader just want to memorize what things look like. You never want to just memorize what a chart, what a bull, you can't just memorize what a bull flag looks like and expect to become a millionaire. You can't just memorize what, a gap is called and expect to make a lot of money and have a full understanding. whenever you're looking at anything in regards to technical analysis, whether you're studying gaps or you're studying chart patterns or you're studying anything else, it's never enough just to memorize. You have to understand the supply and demand dynamics that actually make up what you're looking at. So the reason why this type of gap, which is a common gap, is basically a gap in an area of congestion. So if you are gapping within the previous day's price range, it's basically always going to be a common gap. And those common gaps tend to get filled for the supply and demand dynamics I just discussed. Profit takers who are already long tend to come in to book some profit, and people don't want to come in and chase. Today's common gap, they didn't even attempt to fill it. Why? Because where are the people who are long to come in and book profits after Friday's trading session? Look at this candle on Friday. Who went home long over the weekend based on Friday that is even there to be able to book profit today besides me? No one. Right? And if anything, people probably re-shorted into this move, kept hedges over the weekend if they needed to, and then with this big of a gap up, they're being forced to kind of unwind those. So we had this, really big upside price action, which makes sense logically, though at the time this morning pre-market, it's not what I was expecting. I wanted to see this morning how the upside extension that was formed by this large gap on the small time frames basically gets satisfied. And at the most probable ways that would get satisfied would either be that the market goes sideways when we open, which I would call very bullish, or the market has a pullback. And if the market pulls back or gives a price correction of this gap off the open, of this extension off the open, I really want to see what that pullback looks like as far as how far down it goes into these moving averages before a pivot comes in. Do we 100% fully fill the gap here and kind of go back to unchanged on the day, or do we have a pullback, create a pivot, and then work our way up, in which case the opening high and the opening low becomes very important. Opening high breaks, you can get continuation. Opening low breaks, it shows you that there is no real legs behind the rally. Sorry guys, just give me 1 second. Sorry. So that's kind of the analysis of the opening price action here. And again, we really got that kind of squeeze higher off the open, which is just very impressive, even if it didn't turn into anything. So again, big picture game plan coming into today was to be more cautious, to see how this extension on the upside gets satisfied. And it really didn't get satisfied until like the 5-minute chart, I guess, was finally satisfied at 10 a.m. The 15-minute chart extension didn't get satisfied until 10:45. That just shows you how big of a gap we actually had today. So yeah, very impressive price action. But even with that, we had some really solid moves some really solid call outs in some of these names here. So first of all, Netflix, this is just my favorite of these FANG type stocks. I talked about 235, 240, and 247 as really key levels. This trade doesn't get any better than this. If you bought the break of the 235, you had 60 cents risk on the trade for Netflix, and it gave you $15 worth of reward. It sounded like a bunch of you guys were involved in this. Congratulations. Just awesome trade. So that was Netflix from the morning meeting. APPS we also discussed in the morning meeting for a trade through $14. Might have been, I ended up not watching this off the open. It might have been a little bit tricky off the open with this tail. I'm honestly not sure. But we broke through $14 with great momentum. This is $1 worth of reward. If you were giving it to lows, it's 12 cents worth of risk. Just another, really solid trade. I called out this Coursera, a little bit thin, through $12 as a potential trade there. So it was a little bit thin. This is one I was watching off the open. Risk is down to lows. So really, you got 8 cents risk, but you would have gotten some slippage on it. Because of how thin it was. But this is another one, initial momentum move up to $12.60. That worked great. So those are kind of some opening drive trades from the morning meeting that played out really well. We also wanted to pay attention to Bank of America. I think it was Paul called out this pivot in BAC that he was kind of going long off of it. A few of you guys got involved in it. in that area. It made me a little bit nervous at first because I thought I wanted this pullback to actually be a little bit deeper into equilibrium. I thought it was a little bit shallow, but it time corrected after this pivot for 10 minutes, letting this ADMA catch up to lows, and then the continuation happened, which is also just textbook perfect. And then I think it was Josh had a phenomenal call out in this Roblox. Roblox had news this morning, so it was another one that was kind of on our list as an in-play trade. $40 is an important level, so it pulled back to the daily level. I kind of approached that 40, created that pivot. This is another one. Josh called out the low versus the long versus this low. Kind of very similar to Bank of America, to be honest, even though it's a very different stock. It's a very similar setup. I was a little bit nervous that this pivot was a little too early, that the ADMA was still a little bit too far away, but this one also worked out great, and I know that some of you guys were involved in that to the long side also. So yeah, just solid, even on a day-to-day where the gap made things a little bit tricky on long, short, waiting for the extension to get satisfied. We had like 6 incredible trades today that just gave fantastic follow-through. And that's it. So that's pretty much all I've got for you guys for today. But this is when I turn it over to you guys. So any names that you guys want me to review, any questions that you guys have, anything like that, I'm happy to do that. Just give me one quick moment here. All right. All right, scrolling up here in the VTF to look for questions. First thing I'm seeing here is from Joey. Did Morgan Stanley weekly warm-up have anything to do with this move? I don't know what that is. I don't know what Morgan Stanley's weekly warm-up is. I need you to provide me a little more information on it. So can't really provide you too much on that one. From Michael Burka. I apologize if I said your last name wrong. Why did I feel confident to go long over the weekend? Sure. So I didn't. I didn't feel confident. I don't really trade based on my confidence. I mean, I do as far as like when I'm entering positions, but I don't. When I'm already in positions, it's less about my confidence and more about my game plan. And my game plan said that I still need to be in these trades, especially a lot of the stuff that I bought really good prices on Thursday. Even sorry, I'm really sorry. Sorry. Apologize, I'm getting distracted there. What am I doing? We're talking about going home. Oh yeah, so it's about the game plan that I had. So on Thursday, just to recap a little bit because I know a lot of you guys weren't here. Thursday morning, going into the CPI number, what I told everybody that I was doing, and it's not necessarily that I recommend for other people to do it, but I try. One of the things that's difficult about my position is I want to always teach what the right thing to do is. And sometimes what I do isn't necessarily what I would consider to be the textbook right thing to do. So I kind of do both. I kind of tell you guys both. I tell you guys what I think the right thing to do is, and I also always do my best to tell everyone what I'm doing. So Thursday going into the CPI, what I told everybody here in the VTF that I was doing was putting bids out into stocks like 3 to 5% down. On a whole bunch of stocks, a whole bunch of names that I'm in currently that I'm swinging. I put bids, pretty much all of them. I put bids out 3 to 5% down. The thought process was in case the CPI number was really bad, we would get a really big bad flush all the way to the downside. And then a lot of times when you get that big bad flush all the way to the downside on a news event, there's like a reverberation bounce that kind of happens. It's like very, very common. And at 3 to 5% down when the market's already extended, and understanding my extension rules, where we'd be very extended coming into like 345 on the SPYs is what I was thinking. I kind of want stock into that degree of extension, and I want to be able to capture that kind of reverberation bounce that I am talking about. So that's pretty much what I did. I put bids out and everything. Why I don't recommend that other people do that is you have no idea what your risk is. You have no idea what your risk is. I'm just putting bids out. I'm not putting this is pre-market. I can't be putting bids out with a corresponding stop loss. I don't know where that pivot's going to come in. So it's hard to do it with real big size. But I did it with the size that I was kind of comfortable in doing. So, and then following my game plan that I have for reward maximization, I ended up being in those positions all day, and it was a fantastic upside move, and I was happy. And then Friday morning I was happy, and then Friday into the close I wasn't as happy because these have just been really big P&L swinging days for me, and we closed at lows and the market looked like absolute garbage. But I have a game plan in place for reward maximization, and some of these things that I'm in, like having Apple from 135 or just above 135 on Thursday. Even if this looks terrible, I'm not hitting out of Apple at 138.40 here. I'm following my game plan, which says stay in the position. And then what I was saying was that the market really needs to prove itself on Monday. I was certainly nervous over the weekend, but it doesn't matter how I feel. I don't care how I feel. I don't care how you feel. My feelings aren't going to make me money. Following a game plan that is based on rules that can breed consistent profitability, that's what makes me money. And if the game plan for me is to maintain those positions despite this week close on Friday, that's exactly what I'm doing. And then when I got this big gap up, and honestly probably was making a lot of other people panic because of how weak we were on Friday, people were kind of shorting, I assume on Friday, and then getting screwed this morning, for me that's just an opportunity to be booking profit into that. I was like almost entirely in profit-taking mode as we gapped up this morning and as we initially continued higher this morning. So yeah, so that's the answer to your question. From Bill, can we define an inside day? Sure. So an inside day or an inside bar, and I got a weird tail here on the cue. So let's look at the spies. An inside day or an inside bar is a candle in which an inside day or an inside bar is a candle in which that candle is within the range of the previous candle. That's it, including tails. Inside candles we consider to be basically rest. So the way the market works is in periods of expansion and consolidation over time. The market expands and consolidates and expands and consolidates. Consolidations are great because they create trading setups. So I love, like, even though today was a boring day, I love that today happened because it's going to create a lot of setups for tomorrow. Expansion days usually occur after consolidation days, and expansion days are where you have a lot more opportunity to make money, but you don't really have that same opportunity to make money if you didn't have the consolidation ahead of time. So one of the things that I really don't like doing, which you guys will see if you're on the team here for a while, I don't like chasing day twos. I don't like chasing day threes, meaning that you had a really big upside day today. I don't like coming in and doing a lot of buying tomorrow because I feel like I'm late. And if I'm late and there was a really big day yesterday, maybe that got the market extended, that's going to inherently mean that I have a worse risk reward and a lower probability of success. I always want to be able to be involved in day one and continue to make more and more money on day two and day three based on the skillful execution that I did on day one. But in order for a day one to even occur, you need the consolidation. So inside candles, we look at inside 5 minutes, inside 15 minutes, inside days, inside weeks, inside hourly. These inside candles are periods of rest. Like you can see, even though the market's a 3% up day today, look at this candle versus yesterday's candle, versus Thursday's candle. This is a tighter candle. This is a setup candle. And now the way that we break tomorrow's high or tomorrow's low will be very important for how we want to continue. And this is actually like a really important inside bar today too, because we've been in this disgusting downtrend since that high in mid-August, that, by the way, we as a team also perfectly called this high. We've been in this vicious downtrend since then. And this candle here If we break this to the downside, well, that's trend continuation. You could take this inside day and you could short it. We break this inside day to the upside, and you're really applying pressure on this downward channel. If that downward channel breaks, the inside bar breaks, could create a positive feedback cycle of buying. A positive feedback cycle of buying could cause this channel to break. That channel breaks, it causes a further positive feedback cycle of buying to kind of come into the market. And that, by the way, is how markets work. Markets work in feedback cycles. We had a feedback cycle from mid-July to mid-August to the upside that was primarily caused by short covering. We've had a feedback cycle of selling that has gone on from mid-August to now because of obvious, right? Bear market, blah, 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 interest rates, Europe, Russia, pick your headline. And this inside bar here, this could be the beginning of a setup that is going to be continuation of that weakness or breaking of that weakness. And that's what it is, and that's why we pay attention to them. So I hope that helps. From Melvin, where are the trades posted? Not sure what you're looking for specifically. You can see my positions if you click on the positions window here in the VTF, and I think it like highlights green and highlights red if I execute on any of those positions. I really don't recommend following that. I think it's misleading. Like, I could have a 10,000 share position and sell 100 shares, and you think I'm selling. Like, that shouldn't be something that you're reacting to. What I do is I communicate. And that's what we all are trying to do as a team, is communicate what we're in, what we're looking at, what we're thinking about for execution, and it starts in the morning meeting, right? In the morning meeting, I talk about everything I do as far as where I'm getting in, where my stop loss is, doing my best to communicate all that, what my game plan is for reward maximization. So all you got to do is listen. In the morning meeting today, like, again, Netflix 235 was called out in the morning meeting. So you just got to pay attention in the morning meeting. So that is a lot of kind of what we're doing as far as, where the trades are posted, if you will. Dwayne here, Dwayne just wrote in Amazon. Not sure if there's a specific question or if you just want me to take a look at it. Yeah, Amazon looks pretty good. I was concerned about Amazon coming into today. Amazon was not my favorite. I liked Netflix a lot more. I liked Apple a little bit more. Meta even a little bit more. What I was concerned about with Amazon was the degree of the pullback on Friday. I thought was just too big of Thursday's move. And the stock really proved itself today. I really wanted to see if Amazon could clear above 113. I think that's what I discussed in the morning meeting today. And I thought that was going to be difficult. Stock closed at 107. Am I really going to think that this thing's going to get above like 113 today? And it did. It did, and it closed well. And it's also an inside day. So there's another one here, an inside day just along with the Qs, but really good snapback considering the weakness on Friday. And there's another one where we will see how it handles the inside day. I think generally it looks pretty good. But I also should mention, and I should have mentioned when I was doing my portion of the meeting, let's continue to pay attention to our key factors. What are our key factors? Bonds, treasuries. We can look at the TLT to see that. And this does not look good for the market. The dollar, UUP is an ETF that we can look at for that. This actually has shown some solid improvement here, which really helps for the market. We've got a lower high here potentially on the daily chart. Some further weakness came in today, testing the 21 EMA. Overall, this is still a bullish chart. You could say it's consolidating, but this is not as scary to me right now as the TLT is. And today, the dollar weakness helped the market. So we pay attention to that. Pay attention to the VIX. You can use UVIXI here as a quick gauge of how the VIX is trading intraday. Just realize that this UVIXI is a garbage product because of its time decay. It's generally not something that you really want to trade. You can just kind of look at it on an intraday basis for signals. We want to pay attention to the IWM. The Russell has been a consistent leader this calendar year. It led the top of the market. It's led the bottom of the market. It is still holding your lows here kind of more or less, even with that vicious opening down move pre-market on the CPI day. So the IWM to me looks solid right now. That bodes really well for the market. The dollar being a little bit weaker bodes well for the market. The other one is the semis. The semis are still a little bit scary. Really tight inside day for SMH. Some of them were kind of all over the place. Like the producers weren't as good as like the, I guess as the manufacturers or whatever wasn't as good as the ones that actually like make the technology. Like Nvidia wasn't bad today. AMD was okay today, very tight. A lot of these had inside days. But then you look at like an MU traded like not great. AMAT traded very poorly. So semis have been leaders. IWM has been leaders, and then key factors: dollar, treasuries, VIX, that we also want to be continuously paying attention to with the market. And that's when I'm looking at this Amazon chart, I'm like, wow, this looks pretty good. That IWM looks pretty good. I'm still scared of what the TLT is showing me. But just take the trade. Mike Wilson's note, if he put out a new for once, I didn't get to read Pat's note this morning because I had to do an orientation for you guys. I just like read the very beginning of it, and then I got unfortunately interrupted. Pat's note is a really big portion of my thought process of my morning meeting that I do every single day. I mean, the research I do every day leading into the morning meeting. So again, unfortunately, I didn't read it fully today because I had to do that orientation thing with you guys at 8:45. But highly recommend that you read Pat's note every morning. He posts at 8:30. It's great on macro stuff. Yeah, page 11. I didn't get up to it today. From Jason, which time frame do you focus on pertaining to extension away from the 8 and 21 EMA? All time frames. All time frames. I utilize an 8 and 21 EMA on every time frame, and I pay attention to like even you're going to see it all the time. Like on the daily chart, I'm looking at. I was looking at the market extension away on the daily chart from this 8 and 21 EMA on Thursday's open, and then this morning I'm looking at the upside extension from the 8 and 21 EMA on a 5-minute chart. So that's something that applies on every time frames, and it's a really important part of what I do. From Richie D. Richie D, do you primarily use a 5-minute chart? How do you use other time frames? So, I if anything, I would say I primarily use the daily chart. But I use the daily chart. The daily chart tells me what I want to do, and 5 and 15-minute charts tell me how to execute it, basically. A lot of what I'm doing, everyone loves to talk about risk-reward ratios. I want to make 3 times my risk. I want to make 5 times my risk. I want to make 10 times my risk. Whatever their risk-reward ratios are, I really don't do that. A lot of what I'm trying to do is get daily chart reward for 5 and 15-minute chart risk. And if you can do that, find risk entries on these small time frames, but have a game plan in place that can enable you to have reward in a daily time frame, that's going to inherently give you really good risk-reward ratios. And then what the risk reward is that I end up making at the end of the trade is going to just be based on how that trade plays out. I have some trades where I end up making, 1x my money. And you might say, hey, Derrick, that's not a good trade. You only made 1x your money. But I put myself in the position to make 100x my money if the stock would give it to me. And sometimes on trades I get 100x my money. So that's a lot of what I'm doing. I'm looking at the daily chart to tell me, it's a top-down approach, right? So I don't think that you can be a trader and not be constantly looking at the market, even if you're just a day trader, not be paying attention to what the daily chart is telling you, because your probability of success on day trades even is always going to be heavily influenced by what the big picture is telling you, what those expectations are. You get an understanding of if the market should move up or move down intraday today based on where we are on the daily chart. So it starts with that daily chart, and then it's mainly 5 and 15 minute for me for execution. The 5 is really important to me for the first 45 minutes of the day. The 15 minute really becomes more important to me starting like 10:15. I also will look at hourly charts and weekly charts, but they're not as important to me on my process. I look at hourly charts and weekly charts just more for information than kind of anything else. So I hope that helps. Richie D. Dwayne wants to know what moving averages I'm using. So we're just talking about it. The 8 and 21 EMA. 8 and 21 EMA. The 8 EMA is my blue line here. I know it's a little bit dark. The 21 EMA is my red line here. I also pay attention to it. The gold here, or the yellow, is the 200 day. Ignore this on my 5-minute chart. I think a 200 day on a 5-minute chart is like meaningless. But I want that on there because on the 200 day on the daily is important. I do also like to pay attention to a 20, 50, and 200 simple moving average on the daily charts because they tell me the essence of trend for different time frames. But the 8 and 21, that's my most utilized. I go back to it constantly. No problem. From Paul here. I finally feel like I have my downside under control, but my winning days and losing days are about even. I'm still trading small, around $200 to $300 of downside for the lockout. I have been trying to focus on reward maximization, but upside days are still 200 to 300. In order to work on having a green month, do I focus on making my downside smaller or focus on making the number of green days to red days? I think what you need to focus on is figuring out how you can have bigger up days. That's what I think is the missing ingredient on this. You know, if your risk management is good and you're keeping that tight on the downside, you need to be posting. You know, if a bad day for you is $300, you need to be able to post upside days that are between $600 and $1,500. Honestly, like $1,500 is going to be a really good day, but you should be able to post $500 to $800 days that at somewhat normally, and then every once in a while you're pasting in a $1,200 to $1,500 day when things really come together properly. It is more difficult when you're working with smaller size for the reward maximization because it gives you less flexibility from a game planning perspective. But in that case, I would err more on the side of trailing than trimming. Right? If you've got a lot more tier size, you can trail and trim. If you've got less tier size, it's like I trim and I'm basically out of stock, or I trail and I risk giving back a lot more. I would be on smaller, size. If you're trading a little smaller, I would really be more focused on the trailing side of it for reward maximization. Like if you got anything from Thursday morning, I want you to tell me that you're still in that stock. That's what I'm talking about on the real on where the real reward comes in. Because maybe, some of these trades that I have on from Thursday morning, maybe we have this inside day. The inside day breaks to the downside. This downtrend resumes. We break that low, and I give back a whole boatload of profit. But I am in a position where I'm making money on those executions no matter what. It's just going to mean that I make less. Or maybe the opposite happens. This inside bar breaks up. We get a break of this descending channel. It leads to a positive feedback cycle for the market of buying. We get a big upside move, and I will still be in. Let me tell you, this Apple that I have, I will still be in it at $175. But not a lot. but that's reward maximization. That's reward maximization. That's what I'm looking for. So I hope that helps, Paul. From Joseph, about 4 weeks ago, I bought Q290 puts. Okay. I'm starting to think we might be in a bear rally for the next month, and I should cash out. Any thoughts? So I don't trade options directly. One of the issues I have with options, and this probably isn't this way for the Qs, but I think that makes trailing them more difficult. So what I would do is, you got this position that's been working out for you. You said that you were in it about 4 weeks ago. So obviously this position's working out for you. I would be trailing this position on the way in 4 weeks ago. So you're probably in from, I don't know, mid to early. You're probably in from back up here somewhere. I'm gonna guess those Qs were at 300 or something. For me, if it was my position for reward maximization, I would be continuing to hold it, and I probably would have a trail at this high right now. I probably would be getting out of that Q position if it's getting above the October 6th high. You have to, with your game plan, think about things like liquidity and time decay because it's options. I don't have to worry about those things because of common. but that's what I would kind of be doing with the position at this point. You're in the money. When I have positions that are in the money, I want to hold them for like as long as I possibly can to really be able to maximize the move. And the way to do that is that the only way that you can make more money on positions is by being willing to give back some of the money that you've made. And that's what I was just talking about. I don't mind giving back sometimes very large sums of open P&L. Money that is unrealized, but I know I'm in a win-win situation on it. That's when I'm super greedy, and there have been many, many times in my career that I have given back very large amounts of open P&L. And I do it, and I don't want to say I'm happy to do it because no one ever wants to give back profits, but I'm happy to do it because it's the only way I know I can maximize reward. So I hope that helps. Fubo with some news. Where's HD? Is HD still in Fubo? I'm not sure if HD is still here, but if you're here and you're still in it, congratulations. Very nice. From Rex. I know that we talked about Netflix long enough for breaks 2:35 in the morning. Would you mind talking about how do you confirm that Netflix was a good buy at 2:35? Because sometimes the breakout would turn into a fake out and immediately come back down, or it would just back down without the breakout. Yeah, look, this is what I call the what-if game. You can't play the what-if game in trading. You can't play the what-if game in trading. What if I get in a trade and it fails? Well, what if you do? You game planned it. You knew what you wanted to do. You take the trade. Sometimes trades work and sometimes trades fail. We work in a game of probabilities. Anything that can happen will happen given enough times, given enough occurrence. Anything that trades are going to fail, trades are going to work, trades are going to shake you out, trades are going to work a little bit and then fail, whatever. So you can't play the what if game. This begs the question on what is confirmation in trading, right? For me, I'm looking for confirming factors. What a lot of traders are looking for is they want confirmation, but to them, confirmation is basically the trade worked already. So they're like, oh yeah, I know 235 is the spot, and oh look, it just broke 235. It looks pretty good. Oh wow, look, it's at 236.50. So I'm gonna buy some because it's working. And now your risk reward is terrible, right? So you can't play the what if game, right? I just described this, and we got a lot of guests, so I'll describe it again right now. The what if game is a boxing term, and for people who don't know, I used to fight professionally. I used to fight professional kickboxing for about 10 years. I had about 40 fights. I won 2 world titles in 2 weight classes before I retired, a little bit before COVID came out. The what if game is when, if you follow fighting sports at all, and you especially see this at the amateur levels, if you've ever seen like an amateur boxing fight, sometimes what you'll see is that the first round starts and you'll see these 2 fighters just like staring at each other, just like circling, and no one's throwing a punch because they're afraid. Because in fighting, every time you throw a strike, it inherently opens you up. So, and I got the screen on. So if you got your hands up, right, and you're defensive, and the punch comes, you can, block or whatever. But if I decide to throw my punch, I just opened up part of my face. Half of my guard is gone because I'm punching. So the what if game is, what if I go to throw this punch and I get countered with I throw my jab and I get countered with an overhand right. I go to throw my straight right hand and I get countered with a slip hook. If you play that what if game, you will fail. Because what ends up happening, you'll never win. You're too afraid to ever throw a punch because you're afraid of getting countered. So you just stand there waiting and you just have your hands up and you never score any points. You never have a chance of being able to knock the person out. In trading, the what if game is, oh, well, what if I buy Netflix 235 and it fails, right? So we can't do that. What we want to pay attention to, so first of all, if the trade is breaking and it's part of your game plan, especially if you're a newer trader, you're probably better off erring on the side of taking it than not taking it, is what I would say. But confirming factors are what we call layers of probability. And guess what? I'm going to be doing my probability class live on Thursday at noon, so you guys can pay attention to that one. But what are some of those layers of probability that we're paying attention to? Relative strength. This thing's got relative strength all over the place. It's got relative strength on the daily chart for months. It's had relative strength, amazing relative strength on Friday. The stock's been consistently relatively strong. That's on the side of the trade. What's another confirming factor or layer of probability? Volume. A little hard to tell. It's the first bar of the day here, but volume on this first bar looks fine. Next, time of day. Time of day. Guess what? It's right off the open. That is the highest probability time of day. Is that first half hour when I break the time of day situation into different layers of probability. That's on your side of the trade. Market. Is the market on your side of the trade? Maybe. It was kind of hard to know that today off the open. So I would say that the market's not for you necessarily. It's not against you. Even though the market went up, you couldn't necessarily know that based on how we were gapping this morning. So I would describe that one as neutral. Was there any news in it today? Not that I'm aware of. So that's neither for it nor against it. So, when you go through these layers of probability for this Netflix trade, what you're going to end up seeing is that you had a bunch of them on the side of the trade. You had none of them, some of them that were neutral, and you had none of them that were against it. That's all I need. I game planned it. I knew the level. I knew what I wanted to do, where I wanted to buy. I'm assessing these layers of probability. I had just identified, real quickly with you guys, 3 that are on my side, a few that are neutral, none that are against. I'm not going to call it an A+ trade, even though it worked out tremendously well. But that's a trade that is in my opinion very worth taking. So I hope that helps. Rex from Wong. Awesome opening drive call-outs by me, Pat, Josh, and the whole team every morning. Awesome. If I miss the entries at the levels you called out for the opening plays, at what point should I abort and just let it go? Use 5 and 15-minute extension. Yeah. As a general rule, you really want to have your executions. For the most part, if you missed the execution, it means that you missed the trade. You should be done with it. Now, I don't like chasing, like what I just described with Netflix, right? You miss 235, you end up buying 235.50, 236, 236.50. I describe that as chasing. You miss the entry, you're chasing a higher price. It gives you a worse risk reward and a higher probability of failure or a lower probability of success. I'm not going to say I never do that. I will sometimes do it, but I really make sure to pull back on my tier size. It becomes more of a feeler position for me if I do that, because it's really not the right thing. Another thing that you can do is a retest. You could buy a retest, meaning it breaks through 235, it goes to 237, it comes back down, it's at 235 quarter, and you buy the retest at 235. That will also, you could do it. It is inherently not as good of a trade. What I have seen with consistency is that the best trades in the market give you one opportunity to get stock. You got one chance to get stock. You're in, you're out, you missed it or you didn't, and you never get a chance to get it again. So for me, inherently, if the trade is giving you a second opportunity at that price, it means that there's something wrong with it. Which doesn't mean don't take it. It means that you got to recognize that you have a lower probability of success. So the bottom line is don't miss your executions. That's the bottom line. And I know that is difficult. Honestly, I pay attention if I know that there's a brand new entry level trader on the team, if they can get stock with me or not. And no offense to the new entry level trader, you're just newer, right? So you're slow. It's just part of the business. You're going to get faster as you just do it, right? A lot of trading is like playing sports. You get better by doing it. You get your better jump shot by shooting jump shots. So if I see I got stock, and so does every brand new entry level trader with me, I automatically feel like my trade has a lower probability of success. If I got stock and no one else was able to get stock, I got something good here. So some things to keep in mind. From RA Caesars. 2 to 4 day short swing under 37.38. So you're saying that's for tomorrow if it triggers? It's above that price now. Target number 1 is 35.30. Okay, I don't see it on the daily, but maybe I can see it on a small time frame. It's 31.65. That makes more sense to me coming into those lows. And then the entry is 37.38. Let me go to a smaller time frame here. 37.38. All right, I see your smaller time frame break here on why you would short that kind of break of support. I don't really do those intraday breaks so much. I'm more looking for daily breaks, and I don't see that set up. And it goes back to what I was talking about earlier. But on the intraday, I see it. So okay, fine. If that's your trade, fine. And then target number one at 35.30. That makes sense to me. Maybe you want to be a little less greedy on a first target and go like 35.50. Give yourself a little room for error on that. And then the second target, is basically coming into lows, and that makes sense to me as well. But again, that would be, at that point, I would never get out of my entire position at that price. I'd be looking for further downside if it wants to come in and kind of looking to trail it. Gotcha, JK. From Russell. Is snap along into earnings, or do you play after the report? Yeah, I don't recommend as a general rule that you hold stock into earnings. Holding stock into earnings is always 100% of the time gambling. There is no situation in which holding a stock into earnings is not gambling. You could have a stock gap for or against you to a massive degree. So I really don't recommend, especially newer traders, that they hold stock into an earnings report. With that said, I hold stock in earnings reports. This goes back to what I was saying earlier about I always want to be honest with you. I always want to be honest with you guys, right? Like, I keep it very real. I'll tell you if I had a bad day. I'll tell you when I make mistakes. I'll tell you when I do good things. I don't make money every day. I have days where I make money. I have days where I lose money. Obviously, I've done well enough to be in this business for 12 years and to be doing it on a professional basis and to be talking to you guys. But I'm by no means a perfect trader. And I want to keep it honest with you guys on what the right thing to do is so that you guys can learn what I feel the right thing to do is, but also why I sometimes don't necessarily do what I think the textbook right thing is to do, and happy to kind of talk about that. So again, holding stock into an earnings report is gambling, and something that I never do, like actually never, is Snap is reporting earnings tonight and the market's about to close and I buy a bunch of Snap. I do think actually that's where options make more sense. If you're an options trader, you have access to options. I think if you want to gamble, it's still gambling. But if you want to gamble into an earnings report, you're better off gambling with options than with stock, because at least with options, your risk is premium paid. You know exactly how much that you stand to lose if it goes the other direction, like to the penny. With common stock, you have no idea. You have no idea. One of the worst losses I ever took was years ago holding Triple D into an earnings report. Years ago. I don't remember. It was probably like this move here or this move here, like one of those. 2017 maybe. That makes more sense to me. The stock was down by the end of the day like 40% or something like that, and I got clobbered. I got totally clobbered, and it was all because I gambled. So when will I consider holding a stock into earnings is if I have a really large profit cushion on it. So I tend to want to see two things in order for me to consider holding a stock into earnings. I typically want to be at least 10% in the money on it, and I want to be double the expected move from the options market. So the options market prices in an expected move for every company as it goes into earnings, pretty much. And Pat, by the way, is great at providing us that information as we go into some of these big earnings reports. As we go into the Netflix earnings report, he's going to tell you that the options expected move in Netflix is $10 or whatever. And it's a really important piece of data, because a lot of the times on a really good report or a really bad report, that expected move actually ends up acting as a resistance level or a support level when the report actually comes out. But so that's what the market's expecting. But a lot of times, especially in earnings reports, things don't happen as expected, right? You'll see maybe Netflix tomorrow is pricing in a $10 move and everything's in line and the stock moves $1. Maybe it's let me tell you, I don't remember for certain, but I can almost promise that both of these Netflix gap downs on those earnings reports and that Facebook gap down on its earnings report, whenever that was, I can almost promise you that these were more than the expected move in the options market. So again, anything that can happen will happen when it comes to trading here. Um, so I want to make sure that I have even a bigger cushion for that, and so I want to be in the money by an amount that is going to be double what the options are pricing in, and like more than 10% of a move. So that way, if we have I'm long snap into the report and it's awful and it's double the expected options move and it's a 10% gap down against me, I just gave back profit. And then I am still gambling, but to use a term from gambling, and I don't like doing that too much, I'm entirely gambling with the house's money. Worst case scenario is I give back profit. The best case scenario is I make significantly more. So yeah, hope it helps. From Daniel here, just any reason you use the 8 over the 9? No particular reason, Daniel. So it's funny. Almost every single thing that I do in trading has a very specific reason on why that rule is created or why I do that. The exception to that is the 8 and 21 EMA. 8 and 21 are fib numbers, but I don't care about fib numbers. It's really that the extent of it is when I was a brand new trader, the people that I worked with when I was brand new said, hey, you should have an 8 and 21 EMA on your charts. And I just got very used to, over the course of years and years and years, seeing those on there. And I learned to be able to use those. I don't know if anyone else does this. I could be the inventor of this, the way that I use them as far as gauges of extension. I don't really know if people do that with the 8 and 21 specifically. I do that. That's how my trading technique, style, whatever, has kind of evolved. So 8 EMA, 9 EMA, I don't think it makes a difference. I really don't think it makes a difference, honestly. One goes back 8 bars, one goes back 9 bars. Is that really that big of a difference? Probably not. If you're used to using a 9, then use a 9. But I use an 8 and 21. I also don't use the VWAP from Michael here. I don't use a VWAP, but I'm not against people who use it. Plenty of people here on the team use VWAP. I don't. My charts are simple. I'm a big believer in the saying, keep it simple, stupid. I don't use many indicators. I don't use any indicators or oscillators or anything else on my charts. But if you look at Pat's morning note, Pat uses a whole bunch more stuff than I do. He uses Bollinger Bands. He's got other moving averages that I don't use. He uses the Ichimoto clouds. I don't utilize any of those, but I pay attention to the information when Pat provides it. We have some traders here who like to use DeMark indicators. I don't use DeMark indicators. I pay attention to the information when one of those traders provides me the DeMark. I don't use VWAP. Plenty of traders here use VWAP. And if someone on the VTF says, hey, so-and-so stock is approaching the VWAP, I pay attention to the fact that they said that. The VWAP is really primarily for execution traders who work for funds. It's a gauge of how good they are. And then, similar to any other moving average, it can also be a self-fulfilling prophecy because there are algorithms that are designed to trade off the VWAP or off the ADMA or whatever it is. Like you'll sometimes see, like I was already saying in the VTF today, that I don't think that moving averages are support or resistance. I do not ever buy a stock because it's touching a moving average. But you will sometimes see a stock perfectly pinging off the ADMA. And that's just because there's an algorithm that was created to buy off the ADMA. I need to buy 1 million shares of Apple stock today, whatever. 100,000 shares of Apple stock today. Programmer is just buying it on the ADMA. Hope that helps. From Richie D. My use of time frames makes sense. I like the idea of daily chart reward versus 5 15-minute chart risk. 100 to 1 risk reward. You mentioned. Do you do that with options or how? I don't trade. I don't trade options. I don't trade options. I only trade common stock. There are traders on the team here who trade options. That's a very common question that I get when I do these kind of VTF open houses, because a lot of you guys are retail traders. And if I was a retail trader, I probably would trade options. I'm not a retail trader. I'm a professional prop trader. And if anyone's interested in learning more about professional prop trading, you can reach out to info@t3trading.com. But I'm a professional prop trader, so it does make it a little bit of a different game. Most people that I speak to trade options in a retail account. They are directional traders, and they utilize options for the inherent leverage that's in the product. T3 gives me all the capital I could ever want. I don't need that. So my thought process has always been, why do I want to trade options, which are a less liquid product, meaning more slippage, and subject to time decay, just for capital access, when I already have as much capital access as I could ever want. So I think that's a huge advantage to being a prop trader over a retail trader. I think that options make sense for professional traders only if you're implementing a complex option strategy. If you trade, spreads or calendars or iron condors or whatever that more complex option strategy is that cannot be replicated in the equity market, that makes sense. Or some of our prop traders who do a lot of swing trading, they'll just sell covered calls on their longer swing positions for cash flow and hedging purposes. That makes sense. But a lot of what I do is directional trading, and I don't want to deal with the headache of options when there's no benefit to me for it. So yeah, and 100 to 1 risk reward is very much achievable in straight equity. No, I don't have to say very much achievable. It's not necessarily going to be every day, but those trades happen. From Joey here, I noticed you don't have pre-market on your charts. Any reason for that? I have pre-markets on my charts until the market opens. Once the market opens, I cut off the pre-market because it just makes them very sloppy. For most stocks, the pre-market action doesn't matter. There's no trading, there's no liquidity. There's just not a whole lot going on. For the SPYs and Qs, it's a little bit different. Apple will be trading a little bit, those types of stocks. So I pay attention to that up until 9:30. I have all my charts that you'll see. Typically, all my charts are showing pre-market data to 4 a.m. when I'm starting the morning meeting. When the morning meeting ends, which is usually at 9:28, not today, like I went to 9:30 and 40 seconds. You guys got to stop me. Usually in the period of time between 9:28 and 9:30 when the morning meeting ends and the market opens, I change all my stocks to market, all my charts to market hours, because I think that the pre-market action just makes it kind of convoluted. The flying sidekick. Yes, this is recorded. You should give a subscribe to the Derrick the Trader YouTube. Everyone subscribe to this. If you do one thing for me, subscribe to this. I'm live streaming this afternoon meeting. There's a link. I'm live streaming this afternoon meeting onto the Derrick the Trader YouTube. So you guys can have that there. And then like the introduction thing that I did this morning, you can talk to your trader counselor about if you missed that. From Daniel, am I hitting the ask in a situation like that? I don't remember what situation I was talking about. Of putting a buy stop on the level. I don't remember what I was talking about, so I can just answer the question broadly. I try to provide liquidity whenever possible. I always try to bid into stock and offer into stock or out of stock, depending on if it's a long or short. I always try to provide liquidity whenever possible. So there's another thing that if you're on a retail account where your order flow is being sold out to high-frequency trading firms, you probably don't know how this works, but I have direct market access with my trading. So I'm able to place my orders directly onto the exchanges. So for me, there's a cost difference on whether or not I'm providing liquidity or taking liquidity, on top of the fact that if you're taking liquidity, you have to pay the spread. So if I'm just taking the offer, I'm paying the spread, but on top of that, I'm paying the exchange for it. If I provide liquidity, not only am I not paying the spread, but the exchange pays me for it. I provide so much liquidity as a percentage of my trading that on almost every month, at the end of the month, I am actually being paid by the exchanges for the orders that I put into the market. That's a net number to me because I provide so much liquidity. So I always try to do that whenever possible. With that said, I don't think that a trader here who's on a professional account like mine, who has direct market access, who's part of the maker-taker system, should be providing liquidity all the time. You have to take liquidity if the trade calls for it. The trade calls for it if you're getting stopped out of the position. The trade calls for it if it's a momentum trade entry. So again, I don't remember specifically which trade you were asking about, but if it's a momentum trade that I'm involved in, usually what I'm doing is taking liquidity for the entry. If I'm getting stopped out of something, I'm taking liquidity to get out of it. Everything else I'm doing is providing liquidity. Pretty much all my profit taking is providing liquidity, unless it's a stop that's triggering. Pretty much all my profit taking is providing liquidity, and all of my non-momentum trade entries are also providing liquidity. From Gemis. Hi, Derrick. Question. Any advice on planning P&L goals over the month, quarter, annually, in terms of dealing with the amount of risk that you take, maximum loss per day, the amount of red days you allow yourself to have in a month, in order to keep a healthy monthly income out of trading? Yeah, for sure. I get into this in my journaling class, so if you get involved with T3 as a professional trader, that can be something that you have access to. It's one of my training program classes. You can also purchase it. You can purchase my training program classes by speaking to Amber or Ashley. So I get into that in my journaling class, but the short answer is yeah, absolutely. I don't do too much of the quarterly and annually. I think that when you start talking about annually, it's more about creating like a business plan for yourself, which is also something that you should do. Creating, if you're really doing this on a professional basis, you should have like a broader business plan for yourself. But I do daily journals, weekly journals, and monthly journals. And part of journaling is goal creation. And you need to create goals that are realistic based on the trading results that you've had up until that point. Those goals should be, first you got to keep track of your statistics. Like one of the things you asked is, like, how many red days? Yeah. So know how many red days you had last month, or, how many you're averaging per week over the course of a month. Know what your outlier worst P&L is, your outlier best P&L is, and kind of what the averages are on both sides. And then, as you're performing, you add to that. But the key to adding, and this is also where scale comes in, adding more scale to your trading, doing things bigger when you're having success. Like, that's what trading is all about, by the way, is first creating the rules that create consistent profitability. And then when those are working and giving you results, adding scale. And then adding more scale. And then adding more scale. And then adding more scale. And the key to that, I really believe, is to do it slowly over time. A big mistake that traders make is they're swinging back and forth hundreds of dollars and they have success, and they start swinging back and forth tens of thousands of dollars. I'm probably exaggerating a little bit to make the point, but you know what I mean. You want to build in slowly. So, what I was recommending recently to people is, you probably also have an average amount of risk that you take per trade. An average amount, and there's going to be variability to that. And again, I'm going to get into this in my probability class. The variability to your average amount is what we call risk skew, but there still is an average amount of risk. And then as you are improving as a trader, you slowly add on 10%, 5%, 20%. It depends on how big your starting point was. You add on a percent to your average. So if your average risk per trade is $100 and you had a profitable week, maybe your next week your average trade risk is $110, something like that. And then you build that into the goals that you're creating on your monthly journal, as an example. So I hope that helps. Triple D's gotten you as well at some points. Yeah, that's been a tough stock. I was looking at CZR target 15 after title. Yeah, trail, for sure. From Yunlong here. Hi, Derrick. I have a hard time trading at the open. Yeah, we just talked about this last week. I'm going to do it again. Not with you, I guess. With someone who was saying the same thing. I have a hard time trading at the open. I can't manage it well. I tend to trade in the middle of the day. But when I face a day like today's middle action, I usually chop myself up. Do you have any suggestions? Sure. So yeah, we were just talking about this. So I know the statistics, guys. I've seen the statistics. I've seen the statistics on the traders on the team here. The best traders usually make most of their money trading the open. Entry-level traders usually don't do well at the open. The open is a period of price discovery. Markets are thinner, less liquid, and move much faster, and spreads are wider. For an experienced trader, that's opportunity. The fact that stocks are moving faster, are giving bigger moves because of price discovery, that's opportunity. But you got to be very fast to trade the open. You got to know exactly what you're looking for, how to exit. You got to be able to like make those decisions like so fast and know exactly where you're entering, where the risk is, what the game plan is, put it all together. And the problem for entry-level traders is it's too fast. They're not good enough yet to be able to digest all that information to be able to execute properly. So the statistics that I've seen show that new traders tend to have the best P&L between 10 a.m. and 11 a.m. That's their best time. Experienced traders, 9:30 to 10. That's by far for me. By far for me, the best time of the day to trade is the closer to the open, the better. Like literally, like minute by minute. Like the longer it becomes away from 9:30, the little bit worse that I kind of become. So it becomes difficult because I don't want to tell you to not trade the open, because if you're going to grow into being a really successful trader, that's where most of the best traders make their money. But at the same time, if you're a new trader and you're struggling to trade the open for those reasons, I also don't want you to be losing money. I want you to focus on where you're going to make the most amount of money, which again is going to tend to be between 10 and 11. So what I would suggest is that you don't abandon the open entirely. Allocate small amounts of risk to the open, just so that you can do it. You can get used to it. You can trade, take that Netflix through 235 off the open today. Take that APPS through 14 off the open today. Take that course through $12 at the open today. But don't blow your whole day out if those trades don't work or you're not good at executing. So we all have our different numbers, right? We all have different account sizes. We all have limit downs, whatever, that are going to vary. There's people on the team here that have accounts with $10,000 on it. There's people on the team here that have accounts with millions of dollars in it. So whenever I talk about this stuff, I usually talk about generic numbers, and I keep those numbers very small. And then if you're a bigger trader, you just multiply it. So for you, if your maximum daily risk is $500, just to use some simple numbers, allocate $100 of it to the open, because I think you need to learn it. But don't blow your whole day out if you're not doing well trading the open. Save the majority of that for the time of the day that's best for you. And it's probably going to be between 10 and 11. Midday is not a good time of the day. 11 to 2 o'clock. And there's exceptions. There's individual days where we trend the entire day. Or there's individual days where news comes out midday. Or there's individual days that are just crazy and things are moving all day. Or, news drops in the middle of the day, whatever. And then you want to maybe be a little bit more aggressive between 11 and 2. But guys, I've seen the statistics. Our numbers between 11 and 2 are not good. And that's for a reason. It's because most of the time the market's doing what it did today. There's no rhyme or reason. There's no follow through. You get chopped up. And traders overtrade it. New traders tend to overtrade when the price action is slower because they feel more comfortable doing it, but that's when the price action is also not doing anything. You can't get the follow through. So the numbers, they're just not good between 11 and 2. And I'm not saying don't take it, but if you look at my probability class, which again I'm going to do Thursday, one of the things I talk about is time of day as a layer of probability. The lowest probability time of day for trading is between 11 and 2. So, again, I'm not saying don't do it. I'm just saying be more selective. Between 10 and 11 seems to be like a great time of day to trade, especially for new traders. For experienced traders, 9:30 to 10 is great. And then 2 to 4 or 3 to 4 is decent also. Just the problem with that time of day is you run out of time. Like, I like the beginning of the day better because now I've got the whole day to like let my trade play out. If I'm executing at 3:45, I've only got 15 minutes to let the trade actually play out, and that's going to inherently be a little bit reward limiting. But otherwise, that's a good time of the day to trade as well. From Omer, how do you use 5-minute candle at the open, especially in the first 5 minutes? Just wait for the second 5 minute, or based on the daily chart? It's going to be based on the daily chart and what the 5 minute has shown me so far. So, like, again, if I just go back to Netflix, because that was an idea from today through 235, when Netflix broke through 235, I don't know much, right? I had this little tail down to lows and a candle that's starting to break up through 235. The candle's not closed at that point. The 235 really comes more off the daily chart. That's where I'm kind of came up with the level. And the execution at this point will just be based on the price action so far, even as the 5-minute hasn't closed. So at that point, all I know is it's breaking through 235, and the low of the day is 235.40, or the low of the candle thus far is 234.40. So 234.40 is going to be the stop loss. Or again, I always use a penny below, so 234.39, penny below the pivot, penny below the ignition bar, or whatever it is. From Gemis. What hotkeys do you use to add, remove liquidity quickly? I have hotkeys for bidding and offering, and I can, post multiple routes through that. I can scroll through routes, but my go-to for providing liquidity recently has been NASDAQ. I used ARCA for a long time, I used BATS for a long time, and I still do use those routes sometimes, but NASDAQ has really become my kind of go-to. So, whatever, if I wanted to buy Fubo at, $4.12, bam, there's my bid. just popped up. That's how fast it is. Super fast. That's providing liquidity. It's placing the bid out based on my game plan, which I'm now going to cancel. And I also, as you just saw there, my own orders, I have them so that they highlight in the level 2. I can see my own orders in level 2, which is something that I love. I love that. And then for take liquidity, I have market orders, and I have what I call an uptick and downtick. So an uptick and downtick is a through rate. It goes, the uptick key will take the offer through a certain amount. So again, just going back to Fubo, which I still have up. There's HD. HD, you still got this Fubo? Hope you still got this Fubo, man, with this news after hours. So right now, Fubo is 435 by 437. So if I use my uptick button, which doesn't work after hours, but if I use my uptick button, I think it has a through rate of 3 cents. So if I press it, it'll immediately take the offer up through $4.40 through 3 cents, or $4.39, I guess. 4.40 it wouldn't give me. So it'll take whatever liquidity is between those 3 cents, starting with the inside offer. And I also have market keys. I almost never use my market keys, to be honest. And then I also have hotkeys for stops. I just woke up from a nap. Oh, I got COVID. I'm sorry to hear that. But I bet you feel a little bit better from COVID because of Fubo. I hope you do. James loves the open. I love it. Uppercase James. That's an inside joke for people here on the VTF. Cool. No problem. From RA, when you trail a stock, to use the daily 15 or 5, all. I use all. It's based on my game plan. If I'm keeping a position overnight and I'm trailing it, it inherently means I'm trailing on a daily chart. If I keep a position overnight, I will not trail it on a 5 or 15. But on something I entered intraday, I tend to trail on either a 5 or 15. I don't love 5-minute trails unless I want to get stopped out. Sometimes I want to get stopped out because I just want to book the profit. I'm like, okay, I'm going to let it run. I'm just going to trail on a 5-minute chart. It's going to stop me out. I'm fine with that. Just know that if you're trailing on a 5-minute chart, using my trailing rules at least, it's almost a guarantee stop out. It's very rare that a perfect 5-minute trend lasts all day without stopping you out. The 15-minute chart can last all day with a much higher probability. And if I'm trailing on a 15-minute chart, there's a much better chance that if that trade's working out, that it becomes a swing trade for me at the end of the day. Yeah, for HD, saying first hour and a half, last hour and a half are the best. everything in the middle is noise. I generally agree with that. There's obviously individual days where it differs. Ooh, and we're at 5:30, and right as I got to the bottom of the VTF, and I said I had a 5:30 cutoff today. So I don't always have a cutoff, so most of the time I'm happy to stay here as long as possible and answer questions. But I do have a little bit of a cutoff today, so we'll end it today at 5:30. Welcome to the open house, everybody. Staying late. Welcome to the open house, everybody. If you're a guest, I really hope that you're enjoying. I hope that you're learning. This is just a taste of what we do here every day. So you should already be thinking about how you can be involved, because there's so much that you can learn here as part of a professional team. I'm still learning. I've been doing this for a long time, and I'm learning from the team, and the team is learning from me. It's a give and take here in the virtual trading floor, and that's what I love about it. It's still fulfilling for me because I continue to learn and continue to improve. I hope you guys are as well. So on that note, have a fantastic night, everybody. I will see you all tomorrow morning. Again, we start getting the research in the virtual trading floor usually at about 7:30 in the morning. So that's when I'm going to recommend that people start getting in there. Market up or down tomorrow. Where's Josh? Ask Josh. Josh has a crystal ball, and it can give you the answers. Have a great night, everybody.